The DXY, also known as the US Dollar Currency Index, measures the relative strength of the USD in comparison to other currencies such as the pound and the euro, just to name a few. So let's see how we can use this index in our trading to better position ourselves in the market and take trades like this. Just before we begin, make sure to like and subscribe. Right, let's get straight into it. So first, what you want to do is head over to tradingview.com, then you want to come over here and type in DXY and then click on the first one. Now you have the chart loaded up. So how does this help us in our trading? Well, the DXY represents the USD in the currency pairs that you trade. Let's take GBP USD as an example. If DXY moves up, then this causes the USD in GBP USD to move up, which overall pushes GBP USD down. Get it? The opposite is also true. If DXY moves down, then the USD in GBP USD moves down, and so GBP USD overall pushes up. If this doesn't make sense to you, then substitute the GBP and USD for numbers and apply what I just said. Moving on, knowing this relationship helps us because it allows us to analyze the DXY and see what effect it will have on other currency pairs that we trade, only those that contain USD. This gives us a bias and a direction to trade the chosen currency pairs in. Let's look at two examples. One where DXY helps us get into a trade, and the second where DXY helps us avoid getting into a trade. We will use and apply the knowledge that we have just learned in the upcoming examples. So let's start off with the DXY. So when it comes to using the DXY, essentially what we're going to do is we're going to analyze it like a normal currency pair. So as we can see in this example, what I'm going to do is I'm going to start off by analyzing what I can see on the 4-hour time frame. Very quickly, without going into too much detail, I'm just going to highlight that we have this breaker structure here, and from this point onwards we will be looking for price to return to a order block in order for us to look for potential sells, because we can see price is clearly breaking down. At this point here, we would have marked out this 4-hour supply zone, and from here what we'll do next is we'll move to the currency pair we are trading. So remember that if we are expecting a bearish move like this on the DXY, then the opposite will be true for pairs like Euro USD. So essentially we'll be looking for buys on Euro USD, and we can see that this move that we had a look on DXY over here is aligned with this move to the downside on Euro USD, and so that area that we will be looking for on Euro USD is this one. And as you can see, this area here and this area here are very aligned. Obviously Euro USD's demand area looks a lot better and a lot cleaner, but that's what happens sometimes. But we can clearly understand that we can expect DXY to give us a reaction here, which will mean that Euro USD should give us a reaction here. For this example, I am not in replay mode because there's no point me being in it. I just want to show you that aligning zones like this using the DXY and the currency pair you're trading can give you a very good confirmation that price is going to reverse from that area. And since we know this, if we just drop down a couple of time frames, all we need to do is look at where price is and try and get into a trade in that chosen direction. And so around here we'll be looking for buys, and taking a buy from here, as you can see, would have been the right trade to get into. So now let's have a look at using the DXY to avoid getting into a trade. Sticking with the DXY and Euro USD, let's have a look at this trade. So this is on the 5-minute time frame, and this was on Friday the 4th of November. I want you to pay attention to this area here. So we can clearly see, if we just analyze it very quickly, build up of liquidity, we are breaking down to the downside, and we have a very clear supply zone over here. So a very good sell opportunity. Now let's have a look at Euro USD at the same point. So here we have, we're clearly pushing to the upside, and we have this demand zone over here. But as we can see, there's a clear difference between the Euro USD move and the DXY move. The DXY move actually respects this supply area, whereas the Euro USD move doesn't. And so essentially, when you are actually taking a trade like this from Euro USD, you would be looking for other demand zones below, and we can see we have a very nice clear one just below. And so what I'm trying to get at here is we can use the alignment with DXY to predict which zone is going to be valid and which zone isn't going to be valid. So for example, And obviously I can't really show you this in terms of price replay or during live market conditions because obviously logistical issues and stuff. But what I do want to say is that if we notice that in this move here, price would have arrived at this zone far quicker and before DXY would have arrived at this area here. And so because we know that, and we know that price is not likely to reverse from here but reverse from here instead, then on Euro USD we know that this zone is invalid and this zone should work better. And so when price taps into here and is tapping into here on DXY and they're both aligned perfectly, that's when you'll be looking to enter the trade. And so for this example, you'd be looking to enter at this point rather than this point, which would have given you a nice trading opportunity. Those are the two best examples I could show you of how to use DXY alongside trading smart money concepts and this style of trading. Now you will be able to use the DXY to help build a bias when you are trading USD pairs. And this brings us to the end of the video. Thanks for watching, smash the like button and subscribe, and I'll see you in the next one.